Well, hi there and happy Thursday. I am doing something a little bit different this week. I am pre-recording this call because I've got a conflict at 3 p.m. this afternoon. So I'm in a hotel room in DC this morning, and I am going to run through the deck here and then post it online for all of you to see. I don't know if this is better than doing it live or not as good. You guys can let me know. So here we go. If we look at the overall trend, we are back in positive territory. Volume is 1.75% above last year, the way we look at it. I've seen some other data where folks are saying that it's up even more. But we have our specific methodology that we use here, which is not the entire 135 industry, but sort of a select set. And our data set is up 1.75%, which is really what I was expecting in our last call. I really think the negative impacts were due more to weather than any other factor, and the weather has improved. So you can see how the trend has reversed when we look at our multi-year chart, up 1.75% here when we were off 1.28% for the full month of February. Okay, when we look at Part 91, we're seeing essentially the same um, trend, just a little more dramatic, a little uh, stronger. We have both 91 and Part 91K in this number for anybody that's not familiar. So we just mix everything that's sort of not charter, but still business aviation. And that trend is up, but not materially from last month. So we're at 7.31% year over year versus 7.13. The bigger um, change month over month was on the Part 135 side. When we combine traffic, if we have two positive numbers, Part 91 and charter, we can expect that the combined will also be in the same direction, and we are up 5.71% when we compare the two. So far, every month of this year has been up overall, although we had a slight dip in charter in February that I think was weather related more than any other factor. Now, when we look at size classes, here is the light jet size class. We're in the positive territory here as well, up 2.4%, which is better than our year-to-date trend of 1.1%. Mid-size up 4.4%, quite a bump there. You can see the sort of the red line breaking out here over the gray. And then here is super mid, where we're up 9.8% over last year and 7.3%. That's compared with 7.3% year to date. So we're breaking out even further. No question that Challengers and Citation 10s, all the super mids out there are super popular right now. And then here is the large cabin market, where we're also in positive territory, 1.6%, which is almost, well, more than double the year-to-date trend of 0.7%. And then here is turboprops, which are kind of doing their own thing, completely different trend, off 9.5%, with a 6.2% year-to-date trend. Looking at our major metro markets, here's LA, and this is including all of the airline traffic out there. You can see that there's been a schedule change or something out there that's brought total overall traffic for LA down 4.5%. That is not the case when we pull out the airlines and just show GA. You can see we're up 3.2%. That is a drop from the 11.9% we have for a year-to-date number, but it's still in positive territory. While Van Nuys is the opposite story, we were doing quite well there earlier in the year, but now things have reversed and we've dropped off. You can see this spike that happened in 2025 did not happen again in 2026, and we're off 2.4%. Flipping back to the East Coast, here is LaGuardia, and you can see that there's a dip here. This is not weather related, though. This dip has to do with that tragic accident at LaGuardia and how that shut down the airport. So certainly, um, you know, thoughts and prayers for everybody that was impacted by that. And then here is Teterboro, where we're up 6.6% against a 4.1% year-to-date trend. Very strong performance out of Teterboro. That carried over to White Plains as well, where we're up 6% against a 3.4% trend. And then Farmingdale, where we're up 6.7% against a 0.6% trend. Granted, the numbers here are smaller. We're looking at double-digit flights per day. Could be it's much, much less, as much as 10% of what the volume can be in Teterboro, but it's still positive trend. Morristown is not seeing the same strong demand pattern that we're seeing for the rest of the greater metro area for New York, off 3.5% today or this month, and off 5.1% for the year to date. Then when we move our way out to Chicago, this is Chicago including the airlines. When we pull the airlines out, it actually flips Chicago into negative territory, off 1.7%. And then here is Milwaukee, one of the more popular business aviation airports in the Chicago metro area, off 0.1% compared to a 1.7% drop year to date. So that is an improving trend, but we're still not in positive territory. Here's Atlanta now. This is Atlanta Hartsfield. We can see that with all airline traffic and whatnot, we're off 3.1%, up 14.8% when we pull that out. However, we have to keep in mind that these are fairly small, again, fairly small numbers, less than 100 operations a day. So a very small number in the change of operations can have a outsized impact on those percents. When we look at Peachtree DeKalb, which is one of the popular business aviation airports for the Atlanta metro area, you can see we have a different story there. We're up 11% month to date and 5.5% year to date. And then here is Boston. This is Boston all traffic. The big dips here were weather-related issues earlier in the year. And that contributes to the 5% dip overall. Again, this is including the airlines. When we pull the airlines out, you can see that we're off just 0.1% for the year to date, and we're up 1.4% for the month. When we roll out to the suburbs of Boston, to Bedford, you can see that we've got 2.9% year-over-year gain year to date and a 5.5% month to date. So strong performance out of the suburban Boston area. Here is Reagan National. So this airport, just like LaGuardia, we really don't see BizAv traffic in there. We don't break out GA because there's so little of it, but we like to look at it just to see what's going on at a few of these airports. We do Atlanta Hartsfield, we do LA, we do LaGuardia, and we do Reagan National to just highlight sort of bigger picture air traffic trends overall, especially when we look at weather and some of the other factors. So at any rate, we can see that traffic is off 3.9% on the airline side there. And then when we move out to Dulles, which is the international airport for the DC area, we can see that we also have a dip. We're off 2.1% year to date. We're off 3.2% for the month, but this is including all of the airlines. When we pull out the airlines, it's a little bit better. We're only off 1.6% and 0.6%. Now, traffic here jumped materially over the past year or so, and we had strong double-digit growth numbers. I hear anecdotal reports that it will be hard to grow this airport because there's just no place to park any more planes. Now, I don't know. I haven't been there myself. I happened to fly into Leesburg on this particular trip. Had to meet somebody there, but I hear that parking at Dulles is maybe a challenge. And that may be part of what's helping Manassas here, because year to date we're up 12.7% and month to date up 17.2% in Manassas. So strong growth out of that airport. Here is Charlotte. And for Charlotte, this is all airlines and whatnot. I guess this is one more that we do put into this category. We break it out both with and without GA. So for Charlotte, we're off 10% year to date and 7.7% month to date. This is a scheduled change by American. When we look at GA, we're also seeing a dip. We're off 6.2% year to date and 4.9% for the month to date for Charlotte. Now we look at our second home city markets. Hamptons, it's almost not worth putting them in the deck this time of year. The single-digit flight counts in many cases. Traffic's picking up slightly, but we're still off season, so I kind of take it all with a grain of salt. off 8% and 6% respectively, but it's just very low flight counts this time of year. Aspen, on the other hand, we're coming off of their peak season. So this is including airline traffic off 3% for the month. When we look at just GA, off 11.6%. Just the Aspen and Eagle, the whole, Colorado mountains, matter of fact, most of the West just had a tough winter, and it's kind of coming to an end at this point. So you can see here's Eagle slash Vail, including the airlines. When we pull the airlines out, see that the traffic dip is even stronger, off 8.9% for the month and 11.7% year to date. We look at Denver. It's this airport's obviously not just ski country. There's a lot of business reasons to go into Denver. Only off 0.2% year to date, but off 1.7% for the month. Now here's Nantucket, same situation as the Hamptons. Now we're off peak, not really, you know, too much to kind of deal with there, but it is showing a positive trend, up 4% for the month and 4.6% year to date. Martha's Vineyard, on the other hand, is off, just slightly off 0.2% and up 0.2% for the year to date. Now, when we look at Napa, out on the West Coast, you can see we're off 12.1% year to date, so not a popular spot this past month, and off 3.3% for the year. Bandon Dunes, on the other hand, was in positive territory, up 3.2% and off. That's much better than the 8.9% dip year to date. Then when we go to Scottsdale, this airport, it just continues to figure out how to get more more operations into that single runway there, and they're up 6.1%, which is slightly less than a 7.5% year-to-date trend, but still very good performance. Then we go to Jackson Hole. Jackson Hole, coming off of their winter peak, only down 2.1%, much better than the mountains in Colorado, and actually up 0.6% for the month to date, which is very good considering how things were out west overall. And we go to Hilton Head. It was weaker earlier in the year, but at this point, we saw a strong month of March, up 4.9% over last year. And now rolling into our other cities category, here is Addison in the Dallas market, up 10.5%. Pretty significant, hundreds of flights up here, and 4.7% increase for the year to date. So things are doing well there in Addison. Here's Dallas Love, all airports. Sorry, when I say all types of traffic, the airlines, Southwest in particular. When I pull those out, it shows 7.6% month to date and 4.5% year to date. And then here is Houston. You can see we're up 4.9% month to date and 6.3% year to date. So slightly off of the year to date average, but still in positive territory. Now we get into the Florida airports, and here's Opa-locka, the fastest growing sort of airport down there, particularly for the Miami market. You can see we're up 2% month to date, 8.9% year to date. Fort Lauderdale International, for all traffic, that's including the airlines, up 7.8%. We pull those out, we're up 14.1%. So well above the 5.5% trend. Florida was absolutely popular in March. This is their peak season too. That north-south corridor, as you'll see in the top 50 charts, is certainly alive. Here's Fort Lauderdale Exec, which is doing exceptionally well this year, up 33% for the month. Look at the increase in flights here, and 23% year to date. So that's really significant growth there out of Fort Lauderdale Exec, which is already pretty crazy. I think the last time I was in there, I waited 30 or 40 minutes to get off the ground. So definitely lots of activity in there. Naples is up 8.1% for the month to date and 3% year to date. So that's the Gulf Coast airport that we track here. And then here's Palm Beach. You can see we're up and down here. We have a presidential TFR that has impacted things just a bit. And, that's just what happens to Palm Beach this time of year. You can see they kind of drop off in the middle of the summer and whatnot, but this time of year, the presidential TFRs do have an impact, and those do push a bunch of traffic to the other airports, so Fort Lauderdale and all of that. Okay, so for our last slide about just general airports, we have Nassau just off the Florida coast, up 10.6% month to date and 6.1% for the year. Now we roll into our top 50, and we can see that for the last half of March, um, Teterboro was a theme. Look at how many airports here are either um, originating, or how many of the top routes are either originating or terminating in Teterboro. And then a lot of Florida in that mix as well. There were over 1,089 flights in the top 50, which means there's a lot more concentration. The number of flights that we're seeing on the top destinations is at peak levels. And then when we go to fuel, here's the most recent 2 weeks. So it's a little more than that from the March 18th to April 8th. You can see we had some pretty significant jumps over a dollar a gallon in Mississippi, almost a dollar a gallon in Minnesota, Florida up 95 cents on average, Connecticut up a dollar too. So big bumps in fuel price. Obviously, I'm seeing that fuel is getting positively impacted. Prices are going down because of this truce that we'll see if it lasts. But at any rate, these numbers are going to not impact or not reflect any of that because they're from a few weeks beforehand. And if you want to look at overall prices here, you can see they're kind of right up there. Look at Rhode Island, $9.20 a gallon. Connecticut, 8.34. So you've got some really, really steep prices out here. Oklahoma is really standing out at $5.70. So if you need to stop on your way across the country, Oklahoma's a place to get gas. So that winds up what we have in the deck for this week. Um, you know, little different because we don't have an audience and whatnot, so I'm not getting any of the comments or whatnot there. And for those of you that are used to jumping on at 3 o'clock, I will be sending an email out here shortly that has a link to this video. And if you want to watch it at 3, you can, or whenever. So at any rate, I appreciate all of your support. That's why I do this. Um, I will say next week, if you have the opportunity to make it to the NATA event at Priester on Thursday, I'm going to be there. I'm giving a little presentation, so I would love to see you um, out at Priester next week if you're going to be there. And if not, at the next event. So at any rate, everybody have a great next couple of weeks. We'll see you in 2 weeks for the next call. Thanks.